How is everyone doing? It's been such a long time. It feels like I was not fit for recording anything for an entire week, and probably one of the most important weeks in the markets as well. So, very poor timing on my behalf. But thank you for sticking with me. How is everyone? Leave me a comment in the chat. Let me know how you're going, how are you feeling about the market, all that kind of stuff. If you are new here, massive welcome. I normally go live every Tuesday, Wednesday, Thursday for the Asia session open to give you my thoughts. Unfortunately, last week was unable to do it, lost my voice, got super sick, thought I got kidnapped. Did not get kidnapped, just very, very sick. Still am. So if the volume is not great, it's just because I'm struggling to talk at a very well projected pace. So I apologize for that, but just let me know. Look at everyone jumping in the room. Alicia, hello. Ryan, how you doing? Claire, Nick, Romit, who else have we got? Bertha, John, Santi, Victor, Mr. Stoz, hey miss. Who else we got? Alinta, hello. At home with a tooth infection. Oh, that sucks. What else we got? Theo, Nilesh, Pranav, hello everyone. Thank you for being here on my return to social media. We're going to have a look at this price action today. We're going to talk about a few things. There's really two major levels that I am most interested in on Bitcoin at the moment. And I'm kind of happy to sit on my hands until, price reaches one of those areas. So we're going to talk about that. I do have my hot tea here, so don't mind me if I need to take a sip in between just to rest my voice. I will let you know because I know that sound is super annoying. But here we are. So if you are new here, welcome. If you are returning, welcome back. Massive shout out to everybody in the TTC Discord. Be sure to smash that like button once you have learned something. That is the deal here. So let's get into this and let's learn something. I want to start zooming right out because we are at the start of the month. So it's good to get a big overall idea of where we kind of are. What is this? Don't know. In the grand scheme of things. So what I wanted to point out about this particular area right here is that we know the rule about market maker candles, that once a market maker candle has been printed, so we're looking at the June one in particular right now, once that has been printed, we want to know if the market maker is going to come back to recover that entire candle. Now, we make the assumption that if price comes back to recover more than 50% of it, it's likely that the market maker will send price to recover the rest of it. And then a decision gets made from there. So when we look back at June, once this candle had closed, we really needed to see July close back above 50% of the June candle if we were to expect further upside. Now, this white line that I have marked up here at 24,870 is the 50% line of that candle. And you can see that in July that just closed, we failed. We just failed by a wick to get to the 50% mark. The other thing about that, which is quite alarming and what's making me cautious, is that the volume, when you look at these 2 months, is basically equal. So it's telling you that for the volume that it took to send price down here in June, the same amount of volume couldn't even recover 50% of it. So that is, on a higher time frame, still extremely bearish. Then, sorry guys. When we zoom out, we can see, we'll have a look on the weekly, but we can see that we've currently had 2 level drops. But before we get to the weekly, I then want to talk about this blue candle here. So now we know in order for us to expect continuation to the upside, price needs to break and hold above 24,870 kind of area. If we run the exact same exercise on the current July candle and we mark out the 50% line, that brings us to 21,734. So what that means is that if price were now to retrace down to that level and hold there, then we could expect continuation to the upside. And it could just be that we've had this move up, we have a retracement, and now we're going to go up for another level. But in addition to that, on smaller timeframes, there's a lot of other obstacles in between that may not let price get that low. So before I get to the lower timeframes, on a higher timeframe for a longer term trend, the two levels for me that I only care about is price staying above 21,735. If we retrace from here, then I'll believe that we are going to continue up. If we don't retrace at all and we just start moving up from where price is right now, it needs to break above and hold above 24,871. So the two options are, just to draw them out for you, that price retraces down here and then comes up to there. That would still be a reassessment level. I would not assume that if price were to retrace and go up to here, that means we're going to recover this entire candle here. I don't believe that we're going to do that anyway, even if we break the 50% line, and I'll show you why on the lower time frames in a second. So option one is we retrace and then we push up to the 50% line. Option two is there is no retracement and we break the 50% line, come back for a retest, and that's where we reassess if there's still enough momentum for this to keep going to the upside. Whilst price is under that 50% line of the red candle here, I remain bearish. So all I'm looking for as a current person who is bearish is I'm looking for a reason for my bias to change. So I'm currently short. I'll show you where I got into a short position. But whatever way, whatever direction I'm trading, I'm always looking for where that trend may reverse. A, so I can bag flip, and B, so I don't become blinded to the position that I've taken, which I think is very dangerous, and a lot of people do that. So those are the two levels on a high time frame. Now let's go down to the weekly. And on the weekly, we can see that if price were to continue up to recover this weekly candle, that is at about 26,500. Now, this 26,500 has been my area of interest the entire time. Once this move started moving up to the upside, that is where I personally believe the top would be in. And I'll show you why on the daily, but the fact that it's matching up on the weekly and the daily just gives me even more confluence. But if we zoom out now and just take a look at what's going on here, even though we've had this recent move to the upside, the weekly is very clearly showing an M formation up here, which was at the peak of the bull market, a level one drop here that broke the 50 EMA, retested it, failed it, and now we have a level two drop. That is still extremely bearish, even though we're having this little temporary move to the upside. And then when we have a look at where this candle landed, if we drag that down, you can see that it was a full recovery of this market maker candle right here. So is it possible that we are literally having a repeat of this right here on a higher time frame? Let me just, what bars am I looking for? I think this one. Yeah. Where something like this now may repeat, not down to $4,000. Don't worry about the price. But this may lead to a level 3 weekly drop, especially if price only pushes up and remains under the 50 EMA on the weekly time frame. Potential failure to recover this candle here, that would have me being on a higher time frame, very bearish and expecting level 3. Excuse me. So keep that in mind. Now, I know most of us on this channel day trade, so it doesn't really matter what's happening on the weekly, but we do want to be aware of how price is looking on a higher time frame, because we can get carried away with thinking that, you know, the bear market is over and we're just going up from here. But when you zoom out, there is nothing about price action that tells you that the bear market is over. So just keep that in mind. Now, when we go down to the daily, I'm going to show you why that 26.5 has my interest as well. Now you can see here on the daily time frame that 26.5 that was the top of the weekly market maker candle is also the top of the daily market maker candle. So that just gives extreme interest to me. And I also would not be surprised if price did push up there, give us false hope that we've crossed the 50% line of that monthly candle, and then fail. So that's another thing to keep in mind. The other thing too on the daily is, as we know how the market maker model works, if you were to assume, just for the sake of doing the exercise, let's just assume this whole thing here was 1W. And we know that the right side of the W needs to break the 50 EMA with a market maker candle and then come back to retest it. At this point in time, if that is the rule, we haven't had that. This break on all of these candles here that got above the 50 EMA is weak. They're all dojis, they're low volume. This one got us up to the 50 EMA, but it didn't break it. So it does look like, when you look on the daily, that the steam has definitely run out of this. And again, if we were to mark this candle and mark out the 50% line of that, let's do that together now. So the 50% line of that is at 24,370-ish. And we've wicked there 3 times so far. So that really was the perfect rejection level to expect further downside. The only problem is that price hasn't really done anything since it did that. So that's what makes it tricky. And now I want to remain unbiased until price shows me a clear direction, but I have my conditions in the meantime. And my condition is, we come down into this area of interest. That could be a retrace. Until we break below it, I'm going to assume it's still a retrace. Or we break above and hold above the 50% line. Then we're coming back to recover the rest. Now, let me go down even lower. Sorry to do absolutely every time frame, but I know that people trade different time frames, and sometimes when the price isn't clear, you have to consider absolutely everything. So now you can see on the 4-hour time frame why I have this area of interest marked. Not only would it be the 50% line of the July monthly candle at the bottom of it, but we also have this candle here, this market maker candle on the 4-hour time frame that has not yet been recovered. And we also, within that candle, have the 200 EMA. So this entire area here is an absolute perfect area for a retest if we are to continue to the upside. So I don't really care what price is doing right now. This is not where I want to play the game. I want to see price come down into this area and react according to what it does when it gets there. Another very interesting thing to note about this area, you can see I have marked here this 22,600. For the last few days, that has been a very high level of buy orders on Trading Light. Let's see if those orders are still there. So we've got they're still there, that 1.3K at 22,600. And you can see here that we do have large orders either side of it. So I'm going to add that onto my chart, and we will just have a look at those and make sure they're still relevant. But at this point in time, Asia is just opening now. Where has my session time thing gone? Anyway, I'm on the 4 hour. So at this point in time, this looks like the range that Asia wants to hold. We will double check that in a second. But that also lines up with price coming back just to the top of this candle. Now, if price can't break into that area, that's perfect for upside continuation. That's great. We don't need it to come back and recover this whole candle. We really want to see it bounce away from it. And the fact that that is going to line up with around the 200 EMA is perfect as well. If I get that bounce there, that's where I will close my short and potentially bag flip long, providing the candles give me my final confirmation. That's my area of interest for a short. Oops. All right. Now, let's go and have a look at the 1 hour. So I'll show you. This is where I shorted actually on the 15-minute on the weekend. And I'll show you my reason why. So on the weekend, I believed that we went into the weekend on a level 2 rise, which on a higher time frame. So I was waiting for the final rise to short. This gave it to me here, and I saw this big wick to the top of this candle right here. Comes in with high volume on a weekend, which of course could be a fake out, but it did create the high of the week. Then price never returned back to that wick, as you can see there. If price doesn't return back to a wick once it's created a new high, it's trapping people. So in this wick here, people went long. That's what you have to remember, because for every buyer, there has to be a seller and vice versa. So whoever was shorting here, somebody was buying the other side of that position. When price doesn't return to that, then you know that people are trapped and the market may reverse soon. So based off that, I took a short position. I think it was towards the end of this consolidation. It was either this candle or this candle. And this is where I've been short ever since. Now, when I zoom out, there is a chance, because I took this on a 15-minute time frame. So there is a chance that my 3-level drops have already played out, and I am aware of that. However, when I look at the price action right now, one thing I've noticed lately, and you can go back and back test this, is that the market makers have been making big moves in the dead zone. See here, we had a big move this morning to the upside. Here, we had a big move to the downside, especially at the start of the week. Is Annie a bot? I'm not a bot. Especially at the start of the week, they have been making big moves in the dead zone. And those moves have been pretty consistent at deciding the direction for the rest of the day. Not to trade off that, because it is a risk, but it is something to note and something that I'm definitely going to be watching out for today, because this could be the position to bag flip. And that could be because the dead zone here has given us that one move to the upside. If price now I do recognize that this is a W. However, I'm a bit skeptical of that W just because of where it's happened in price action. But if price can come back now and create a higher low during maybe the Asia session, something like this, then I would think that we are going to continue to the upside from here and that our retracement move from the weekend is over. However, in a perfect world, which we rarely get that in trading, so just be aware, I would not want this second peak here to break below this market making candle right here. Okay, and it's obvious why. That's where the high volume is. That's where the 50 EMA is. That's where the 800 EMA is. This is just going to be a very ideal W if we can hold here. But you then have to be aware that we're coming into these sell orders, which you would have to reassess at the time to see if they're still there. They may remove if we get that W formation. The other thing to bear in mind, however, is that if you are going to be looking for W formations right here where price is right now, you are counter trend trading whilst price is under the 200 EMA. So that's up to you how you choose your your bias. For me, the only reason I would start looking for a W is because I'm already short. And the way that I trade is I bag flip longs to shorts on M's and W's. That's it. So I already have my short position. All I care about now is where is the bottom going to be found and give me that W formation. And it may not even happen here. Price may come down into this candle before it does happen, which I would actually prefer, to be honest with you. So be careful of this, because don't assume that this move up here is a W or the start of a W, because it did happen in the dead zone. Be very, very strict about your W formations if you're looking for longs. Whilst price remains under the 200 EMA, and that is a perfect rejection there, you should have a bearish bias with the goal to get back into this zone here and then reassess from there, or at the very least 22,600. A W formation at 22,600 is going to be much better than looking for where it is right now. So keep that in mind as well. Now, the other thing I wanted to point out that is very, very interesting is if we zoom out, actually, let me do this on the 1 hour time frame. If we zoom out and say price does give us a W and move up, it could move up to be only the inside of a higher time frame M formation that has not yet formed. This is where it gets kind of tricky, because it's very easy to trade this model when it's only trading on the 15-minute time frame, but currently the model is trading on the 4-hour time frame. So there's a lot of things that we need to be aware of at the exact same time. And what I mean by that is, if this is creating a 4-hour M formation now, or 1 hour even, because we've had our 3 rises on the higher time frame, then this whole move here, let me mark it out, this whole move here could be the start of the M formation, the left side of it. And what is coming is the right side of it before further downside. And if that happens, we're talking dramatic downside. We're talking back down to the lows if that happens. So here's what's really interesting about this so far. If we do stop here and we do come up to create that right side M, when we draw fibs from that high to the current low where it is now, if price were to come back up into this area where we had the really big wicks before, we're looking between the 61.8 and the 50 fib level. In addition to that, let's add on this little guy here. Where is he? Here we go. When we add the fixed visible range, whatever it's called, we can see here that the point of control, which I absolutely love the point of control, because it's very, very easy to trade. If price is above, you're bullish. If price is below, you're bearish. The point of control also lines up very well with around that 61.8 level. So if you're a day trader and you get a 15-minute time frame W formation anywhere around here in this green box today, there is a possible day trade long, but be aware that there's a very high chance that that day trade long is the inside right side of the higher time frame M formation. I know this is super confusing. I wrote out a whole document for the guys in my Discord about this on the weekend, because the model plays out on all time frames, and what's happening on a higher time frame could be completely opposite to what's happening on a lower time frame. But that doesn't mean if you're waiting for this second peak M as a day trader, that does not mean that you can't long to that point, bag flip, get yourself the juiciest position ever created for the next leg down. The other thing too, let's just mark out something else, as if we don't need enough convincing here. Wait, let me get rid of this, because now we're getting confused with too many things on the chart. Hide that and I'll get rid of this. What was I going to say? Yes, sorry. The other thing too is if that is the area where we create the M formation, it is going to reject the market maker candle that started this downwards movement. That is to me the most perfect setup that you can dream of if you have a bearish higher time frame mindset and you believe price is going to head down. You couldn't ask for more, really. And in my opinion, it's worth waiting for. Now, may not happen. We may just continue to trickle down from here. That's absolutely a possibility. And in that case, if that were to happen, all you're doing is shorting the 50 EMA rejections. Very easy. An inverted hammer at the 50 EMA, that's your entry to short if we don't come back for this right side M. All right, let me see if there's any. Is there anything stopping downside continuation earlier than forming a whole on that 4 hour? Anything stopping? The only thing that will stop is the market maker candle. So we know to the downside, this one here is our area of interest. We know to the upside, this one here is our area of interest. Whilst price is in between, it can do whatever it wants. All our job is to figure out which one is it heading for first, and then what is our play once it gets there. Price may come down to here today to finish off the inside M, something like this. It may do this before it even bounces at all as well. That's another thing to keep in mind. Impossible to tell in the dead gap zone. But at the end of the day, for me personally, there's no game for me to play whilst price is between this candle and this candle. I'm just waiting. Now, let me have a quick look at Ethereum, and we'll do the same process, but we'll do it much quicker. So Ethereum was a little bit of a different story because when we have a look at Ethereum's monthly candle, the July candle did close most of the June candle. However, so far, again, it came with higher volume, but less of a move. So you need to keep that in mind. So far, it has failed to continue up. Mind you, we are only 2 days into the month, so just keep that in mind. But for ETH could come back. It could retrace back to around that 13, what is that area? Let's just say 1,400 round number. Price could come back to that 14, was that 40? Yeah, 1,400, and then continue up from there. Let me mark that out here. So we could get something like this, a continuation to the upside. That is absolutely possible at this point in time. That 50% line is 50% of the July candle. Let's have a look at the weekly for Ethereum. So for Ethereum, also pretty clear that we've had 2 drops on the weekly time frame, and price could be coming up to the 50 EMA, also to make its way towards this candle here on the weekly time frame, and it may reject there for our third level down. What does that put it at? Around 2,100, kind of round number, $2,000 ETH kind of makes sense to short it there. So be very careful if price did continue up. Be watching out for this area. Let's have a look on the daily. So on the daily, it kind of lines up with this area again. Well, they're already marked, so I don't need to remark them. But we've got these candles here, which line up with the 200 EMA. So kind of it makes sense that could be a rejection zone. At the end of the day, even if you just drew a very, very simple retail trend line on this right here, and price did come up into that area, it is going to be the third touch to a trend line. It's still bearish. So on a higher time frame, it's still bearish. There is a lot of work for ETH, for Bitcoin to do to be able to believe that the bottom is in and, that it's over now. We're going up from here. I'm skeptical on that. I think we're just having a nice little rally in an overall bear market. On the lower time frames, again, price is currently under the point of control. This price action is ugly as all hell, and that's why I'm not interested in trading this zone. Like, what even is that? It's not even a drop. It's just it's a keep you guessing kind of price action. So we don't really want to be part of that. Let's skip that and go down even further. And this is a good example of how you can have levels that don't actually reduce or increase price. So we've had this push up here created the high of the week. You could call that the M formation there on the 1 hour time frame, if you were lucky enough to grab it. But price just went sideways after that. This is a drop here that kept price actually sideways. And this is another drop here. This one did drop price down, but price looks like it wants to come back up into that zone, struggling a little bit. But at the end of the day, what we want to see for ETH, if we're going to believe that it's going to break down, is we want to see price not able to get back above that 200 EMA. Currently, it's trying, but we do want to see it fail. And if it does fail, then this is the candle area that we're looking at right here. If it's going to create a higher time frame M, then again, look for that point of control right there. That looks like a perfect area to short if price were to come back up, because that's going to come back up to the high of the day. It's the point of control. It'll keep all of these people trapped up here. So that's really the area there. The high of the day is currently sitting at 1724, if price can get up there. But be aware that it may also just reject the 50 EMA. It may not get that high. Any rejection of the 50 EMA from this point forward is a good area to short back into this zone. That's kind of how I'm feeling. By the way, if you are enjoying this content and you want to learn this method in full detail, it is the start of the month, meaning it is the perfect time to join. This is when you get the most value. Not only does the subscription give you access to our Discord where we are trading this method every day, I also have other traders in there that do live sessions at every session open. So if you're wanting to trade an actual session, you just jump onto their live, get an idea of their thoughts, and it helps to give you confidence in taking trades for yourself. Whilst you are learning and not actually ready to trade yet, we have our entire course online. Once you have your subscription, you get access to this course. It's market maker method. We go through heat maps, other trading strategies, so many tools in there. We've got trading journals for you, calculators, everything like that. Once you've got your Patreon subscription, the link is in the description below. You can see here the whole course is in order and you can just go through. In addition to that, not only is there the video lesson for the course, but if you click on the materials tab there, we've got downloadable material to help you keep all of this stuff in check, to have it with you whilst you're watching the video so that you can understand exactly what we're doing. So come and join us in Discord. We are a very, very active group. There are people trading there all day, every day. If you want to learn heat maps, this is the thing about heat maps. The difference between heat maps and a charting software is that charts are an indication of what has already happened in the past. Heat maps are an indication of what is likely to happen in the future. And we want to trade in the future. We can't go back in time and take a trade. We can only move forward. This is why heat maps are so valuable, because it gives us a hint of where everybody else is looking to long and short the market, and it gives you an absolute edge. And if you want to be a trader, 100% think everybody should understand how heat maps work. Finally, on that note, we'll have a quick look at high block. I already looked at this morning. There was really nothing to report. Currently, the delta is to the shorts at 3 billion. Doesn't mean much to me. But the one thing that does stand out to me about this area is this long here. So longs will be liquidated at 22.5. That gives confluence to this area here that we were talking about, where we have some long orders at 22.6, but it's kind of at the top of this candle here. So really liking that 22.5 to 26 area for a bounce, and probably just going to exercise patience and see what happens when we get there. it will also be the bounce of the 800 EMA. So that is my play of the day. I hope that this video was helpful. It looks like electrical dysfunction. It is very hectic to look at if you don't know what you're looking at on heat maps, but once you understand it, it's an absolute game changer. So I'm going to go before this voice runs out. I hope this was helpful. If you did, please smash that like button. It really does help get our videos around the internet. If you are looking for somewhere to trade, OKX is my preferred exchange. You can also grab the link from the description down below. They have up to $2,000 sign-up bonuses for new accounts and 15% discount on trading fees with the link in the description below. So grab that, grab the invite to Discord, come and join us, and be careful today. Watch out for those areas. Be aware if you take a shorter time frame trade that it could be a higher time frame, something completely else, different. But I will be back tomorrow and we will discuss how this played out. Have the most amazing day. It's good to be back. See you tomorrow.